the market open in Asia and where the direction of travel may be. We've seen oil prices rise in early trade in Asia today. First day in a few days that we've actually seen prices up at the open. Let's kick off this morning with Mr. Robin Mills, CEO of Kamar Energy. Robin, sitting in Dubai with the OPEC meeting, again, yet another one this week. What is your thoughts about that meeting? Can we expect another surprise?
Yes, I think OPEC and Prince Abdulaziz in particular have got into the business of giving us surprises. And I think, look, the guidance coming up to the meeting, I think was clear that the plan was still to have these phased increases in production that were agreed last time. The Russians very much guiding towards that, seeing this meeting really as just a technical meeting and the confirmation of the path they're on. But I think the news in India will make people think very carefully, and I wouldn't rule out a surprise. And that may be that the increased production is delayed, but perhaps more likely some unilateral action from the Saudis, perhaps some retention of their production cuts, just because obviously the news in India is so negative for oil demand, and really the picture is globally is patchy. There are some bright spots, but India is a big negative spot right now.
Would that not be very difficult geopolitically, given the sort of sensitivity? I mean, ultimately, holding back on the increase would be, bullish for prices. That would be putting greater pressure on India at a very difficult time.
Yes, it would be. But I think you saw in the recent comments exchanged between the Indian oil minister and Prince Abdulaziz, that the Saudis were not super sympathetic and said, well, why don't you just use all the oil that you bought so cheaply last year, in response to the Indian complaints. I don't think there'll be particular concerns over being seen to help India out. I think it'll be more practical. Is holding oil back and boosting prices, is that going to be negative for demand? We'd already seen Indian refiners cutting back, and Indian demand possibly weakening on higher prices even before this surge of coronavirus cases.
Peter Maguire, CEO of XM Australia, sitting in Sydney. Peter, despite the terrible headlines and reality in India at the moment, the Sensex continues to perform very well, not really giving up much ground, and if anything, rising. Your thoughts on the outlook for markets, that top end of the K that seems undisturbed by all of the sort of COVID resurgence?
Well, good afternoon, Sean, and good afternoon, fellow panelists. I should say good morning. Sensex, it's been bid up, Sean. We're up 0.75%. It's a choppy day. We've got Malaysia down, Japan down 0.75%, Philippines spanked down. So it's not a positive day across Asia on a whole, but India's been well and truly bid up. And rolling across, of course, the building on Robin's comments as far as the COVID numbers, it seems to be, that seems to be gaining momentum, and I'm not sure how it plays over the next matter of weeks from a demand destruction standpoint. If it really ramps up so significantly, I've spent considerable time in India, and I appreciate the way people live over there, in the sense it's very, very crowded, as we all know, and that's a given, but you just hope that it can be contained. So there's the first part. The second part is, I feel as though that in some ways the Indian economy has got, it's going to be certainly bid up and further upside for the Sensex and the Nifty in the short term. But the only handbrake, of course, is the impact as far as COVID numbers, Sean.
Good morning, Leo Tamiris, CEO of NRG Global. Leo, when we sort of drill down into the data, it seems that gasoline usage is up in the US and China, more people driving, more consumption of gasoline, and that steady recovery to pre-COVID levels seems undisrupted.
Yes, I can't speak for the US much, but what you see in China is indeed a continuous increase, continuous bullish market there. and that will only be stronger in the next month. Don't forget, next week we'll have a Golden Week, where the week people take a week off. They will go traveling, they will get on the road, so the demand will only increase further. And we see the Chinese refineries running full out if they are not in the maintenance, to the point that they're exporting diesel, but the gasoline stays in the country and is being consumed.
Robin, the OPEC report yesterday, the last few days, has continued to stick with the outlook of a 6% or about a 6 million barrel a day rise in demand this year. Do you think they need to revisit that number?
I think for now that's probably okay. But I think, look, the picture, as I said before, is really patchy. And if you look at this over the space of a year, yeah, it's probably fine. But I think in the short term, there are big negative risks. I mean, we've been talking about India. Obviously the situation there is terrible. We could be losing 600,000 barrels a day of road fuel demand, maybe another up to 100,000 of jet in the short term. Japan is seeing, for perhaps the first time, seeing a serious wave of cases. Japan is possibly down 100,000 barrels a day of gasoline. So you're getting close to a million barrels a day of lost demand across those two countries.
On the other hand, the blip on supply from Libya seems to be now coming back.
Yeah, look, Libya will always be blips up and down. I think the overall trajectory in Libya has been much better recently. But of course, Libya is going to continue to be volatile. So that's really a month by month thing that OPEC will have to keep an eye on. But I think if you look at the demand picture, yeah, for the rest of the year, the demand picture ought to be strong. We ought to be gradually coming out of this. But definitely over the next couple of months, it looks like a significant short-term deterioration.
Peter, the Chinese government seems to be in a steady and consistent sort of offensive against internet, further crackdowns on other internet companies in India, or in China rather. They had the antitrust crackdown against Jack Ma's companies. Now we have the food delivery company Meituan. What's your reading on this initiative? Where is it going? How significant is it?
Well, it's just a continuation as far as censorship, Sean. Where does it run from here? It's too hard to even get your mind around. We've got a very open system in Australia. Having a look at a closed system like China is foreign to our thinking, foreign and perverse to our way of life. So it's a different world. You've got Robin and yourself in Dubai. You've got Leo in Singapore, and they've got their own way of working with their constituents and their population. But Australia is very much a free flow, and China, that muzzling, I'm sure, will probably continue for many, many years ahead unless we see a change of government.
Is it part of the sort of this wider kind of more robust posture of the Chinese government that we've seen? And of course, Australia, from the point of view of a country level, has been at the sort of coalface of this. And even most recently this week, seeing a lot of fruit exports sitting rotting on ships and not being offloaded, that this is all part of a wider, more robust posture of China.
Absolutely. I mean, even building on that, Sean, is that Victoria, the state of Victoria, the capital is Melbourne. The Premier signed a deal as far as Belton Road a number of years ago, but it came out in news over the last probably 12 months, and the federal government have taken the initiative of tearing the deal up. So that gives you an idea where our viewpoints are as far as China, that's domestically, and we just look through a different lens. We're located in the same geographic zone, but we've got a different way of everything.
Leo, looking across Asia, of course, there's been a sense of America has been taking all the headlines from a demand recovery point of view, at least in recent times. Now India taking them the other way. China has been sort of quietly, in essence, at least around the oil story after dominating last year with its sort of unprecedented import levels, 14 million or so. What is the outlook, do you think, going forward? And can OPEC in meeting this week still hang their hat on China demand while there's these others wobbles in India and Japan and elsewhere?
Well, I think one way to look at it is looking from the dry bulk side, which is a proof that the Chinese market is still very much in full speed. The Baltic Dry Index is at its highest since 2010, and that's mainly driven by Capesize plus type of vessels that transport the iron ore, the steel products, etc., into China. Chinese steel futures have been yesterday were at record highs. Iron ore futures are at high prices. Even your newly favored lumber went up another 4% yesterday. So it's all the show that proves that the Chinese market is growing. They probably take a little bit of a backseat on the oil imports because, first of all, there's still a lot of oil in store in China, which was bought at cheaper levels, which they are consuming first, and hoping to replenish it later with lower markets. But I think that the market is growing very fast, and I don't think there will be a let-up in that in the next coming months.
Robin, in the sort of the outlying on the curve of the oil, we're seeing a strong backwardation. Prices 2 years out are sticking tight to $60 a barrel. What impact do you think that has on the market dynamic? Will that keep sort of investors, if you like, shale and others off the field because the outlook 2-3 years out is not positive?
Well, look, I think partly this is obviously where OPEC wants it. It wants backwardation. It wants to draw down the excess stocks, and that is going well. You know, stocks are. It depends which measure you use, but they're coming close to the 5-year average. And I think from the point of view of investors, well, you know, I mean, the shale guys have to hedge, and of course, their hedging is of course partly why the curve has the shape that it does. You know, that does depress prices over the next 1 to 2 years. But if the price over that period is, as you say, around $60 per barrel, that's good enough for the shale guys. I think they will be happy to hedge. It's when the forward curve is around the 40 or below, then they're in a dilemma: do they hedge at an uneconomic price or go unhedged? But at 60, I think you will see most shale producers, the larger ones anyway, will think that they can make decent money and they can continue drilling at those prices. So I don't think that's a concern. I mean, if anything, that allows them to lock in a significant amount of future supply. And I think as the more that prices continue above 60, the stronger US supply response we'll see. And we do see some slow recovery in the US at the moment. And you know, rig count is rising steadily. And actually the production outlook, including NGLs, is going to beat past records as it stands. Crude is still well below record heights, but overall liquids are set to beat the previous high.
On the sort of position you've taken in the past, Robin, what's your sort of current take on things, given that OPEC should be looking at every opportunity to reclaim back market share and add supply, even at the cost of maybe a few dollars on the barrel? Looking forward to the second half of the year, do you think that has to be a priority?
Yes, I think that continues, and I think OPEC has to look through these short-term issues. Like as I say, look, with Libya's volatile, so there's no point trying to follow Libya, you know, day by day. Okay, if there's a major crash in Libyan output, OPEC can think again. But I wouldn't pay too much attention to Libya being up or down 100,000 barrels a day. The demand picture remains really key. And as I say, I think we're seeing a significant short-term deterioration because of India and perhaps a few other places. But in the longer term, if OPEC has just reaffirmed its long-term demand outlook, you know, at least its demand forecast for the rest of the year, why change? You know, it outlined a 4-month plan at the last meeting. Why should that change when according to OPEC itself, there's been no change in the fundamentals?
Peter, we have this week the majors reporting earnings for first quarter. your outlook for that? Do you think does that give any sort of guidance for where we may go forward in terms of capex and new supply?
Well, if are you making reference as far as the Teslas, Alphabets, Sean, in that regard, those big.
Well, I'm talking Exxon, BP.
Oh, pardon me. Yep, absolutely. Well, they've, as far as those, I'm sure that I've kept a fairly close eye as far as numbers, but I think as well, they'll surprise a little bit. I wouldn't be surprised if they're bid up, but these sort of numbers, as far as the 60 to 65 range for oil, and the possibility of even heading higher over the Northern Hemisphere summer, then it's a feel good, and it's a good time news for those big producers. Where does it move from here? Yeah, I think you'd have to be looking at those style of stocks in a portfolio, and the reasoning is that they were undersold and now they're showing some true value.
Leo, we've had a lot of talk about development or recovery of aviation travel in America and the possibility of a corridor, what you would call it, between Europe and the US over the summer. We've also had now Singapore announce with Hong Kong to open up a travel bubble in May. Is that, do you think, going to be the beginning of a wider opening, or what is the outlook for aviation travel across Asia in the second half of the year?
I think in domestic travel in China is growing very strong. I think international travel will take much longer to recover. This travel bubble between Singapore and Hong Kong, it's a new thing again. But then again, it's only one flight at maximum 200 passengers per day. So it doesn't have a huge impact on it. It probably is not even. Probably a losing-making exercise for the airlines as well.
But they're kind of
the bureaucracy and the waiting times and the cost will be so big that I don't think that there'll be much enthusiasm for it, except for people that want to need to fly for business.
And given that, I mean, we've seen the recent opening between Australia and New Zealand, that travel bubble has had some difficult start with some cases and been postponed or suspended. I mean, these are in essence critical sort of case studies for the wider opening. It was a bit like seeing a few football fans in the stadium in the UK over the weekend. These trial bubbles are really critical for the sort of future mass opening.
Well, exactly, and there was previously, was it a few weeks ago, there was this bubble between Vietnam and Japan, which they stopped because of lack of interest. There was nobody wanted to fly. So it's what was it, 3/4 of a year ago, they tried this travel bubble with Hong Kong as well. And stopped it at the last moment because new cases popped up on either side. So it's not going to be a stable, strong development, I think, in the near term.
Do you think, Robin, with the sort of outlook for aviation being uncertain, but the flip side of that is gasoline and driving, and particularly in the US, China, and other big markets, Europe, the same, that gasoline can make up for some of the shortfall that's still, I mean, it's hard to see 6 million barrels a day recovery this year without significant aviation fuel. Can gasoline compensate at all for some of that?
Yeah, domestically in the US and China, and we're seeing that already. That's pretty clear, but not internationally. So the international travel, I think, as we've heard, long path to recovery, and I think just practically it's hard for it to come back in a significant way until we have really effective and widespread vaccination. Because if you look at China, right, China has been stamping down on cases whenever they crop up, and yet the restrictions on movement in and out of China remain extremely onerous. Nobody's going to go on holiday in China. Nobody's going to make a casual business trip to China. They're not going to go unless they absolutely have to, because the quarantine requirements. Same applies to several other countries, particularly in Asia. So, practically aviation will not return to anything like normal until vaccines are very effective and very widespread. And obviously, nobody drives from Europe to China, right? So the aviation demand is very significant. There's 2.5, 3 million barrels a day in there that's lost, that will not come back easily until long distance international travel returns. For domestic flights in the US and China, they are already coming back, and as you say, long distance driving as well is more than compensating, since driving long distance is a less efficient way of using fuel than flying.
Let's get the view of the room on some of these topics, with the question of outlook for oil prices. The problem for crude oil market bulls is that every time they think they have built up steam, something comes along to knock the momentum off track. Have we already seen the 2021 high for Brent at $70 a barrel? Have we already seen the 2021 high for Brent at $70 a barrel? Peter, on this point, there's so many different reasons to be quite bullish as this market has been across all asset classes now for a number of months. We're seeing, as I keep repeating, the future benchmark for lumber and wood hitting a record every day, 50% plus jump this year to date. The World Bank giving massive growth forecasts, and yet oil cannot really build up any momentum. Is the high in for 21?
Well, also on that, Sean, we've seen very, very strong prices as far as base metals. I'll just throw that in, and copper prices. We've got 8 months to go till the end of the year. You touch 70. I think there's too much time to travel. I still think that there's every chance you could hit a 75. Something wild might happen. Who knows what can happen over the next 8 months? Yeah, we
can you get there without aviation fuel being, not back at 19 levels, but this room, at least today, seems fairly pessimistic on people going to be getting on airplanes. I'm going to get on one as soon as I can personally, but without aviation fuel, can you get?
I think you can, Sean, and I think that there will be flying quicker than what we think. As far as Americans going to Europe for summer, if you've got the passport, then that tells me that they get a green light to go. So that's where a lot of comments coming from. I don't know whether Australians are going to be travelling there, but certainly the US tourists, that could be a possibility. I still think that US dollar's got capacity to probably be an 89 handle. So there's further downdraft there, and that might push up crude a couple more bucks. So yeah, there's enough news out there and enough noise to see crude trend higher over the next matter of Northern Hemisphere summer. Demand picture, US driving season, all of those sort of things. You might see more consumption that way. So yeah, I think it's too hard to speculate that we've seen the highs already for the year.
Leo, looking at the OPEC meeting this week, what do you think they should do? What do you think they will do?
I think there may be a good, in a reverse argument of where we started off today on, India is a very price sensitive market. And I think a way to stimulate demand in India is to push the prices lower, and that you can do with increasing or cutting the decrease in the cuts. So it's an increase in production again. So I think that they, especially Saudi, may very well decide to do it for that reason.
And Leo, just on that point regarding aviation, for the UAE, Chinese tourists had become the #1 source of tourism. And of course, Chinese tourists were all over the world for the last 5 years, hundreds of millions traveling. What do you think the appetite would be from China for aviation travel, international travel, if the opportunities open up in the second half of the year?
I think if they get the chance, they will want to go again. They want to travel again. Of course, the countries which have been safer And Singapore is just being announced to be the best place in the world to be during COVID, the safest place to be. But it will take a long time before Singapore will allow tourism in in any major form. But I
The
think
Chinese are very cautious. I mean, they are very cautious by nature.
Yes, and so from the Chinese perspective, I think they will be cautious. They will be very choosy on where to go. But yeah, I think they are just as much roaring to go as you said you are. So.
Okay, well, let's get the survey result and give Robin the last word this morning. Have we already seen the 2020 high for Brent at $70 a barrel? 58% yes, 42% no. Your thoughts on that, Robin, and again, the outlook for the rest of this week and OPEC being there, but other issues as well. We have the Fed giving some commentary out of the US.
Yeah, look, as we know, price forecasting is always a bit of a guessing game, but I think we've been very close to $70 this year. We're not that far off it now. I think there's every likelihood that we will beat it later in the year as demand recovers. There's all kinds of political and market events that might push prices higher. If you're asking about $80, that's maybe a different question, but I think very likely we'll breach $70 during the year. OPEC discipline still remains very strong. OPEC has my view is kind of erred in the direction of higher prices rather than higher output. If they continue to do that, and we see a significant demand recovery, I think for sure we'll go over 70. I think as far as the upcoming OPEC meeting is concerned, as we've been discussing, I think a surprise is likely. My view would be that OPEC should stick with its plan since its own figures show there hasn't been any significant change. Despite the news from India, but I think the news from India will be on people's minds, and I think that may well trigger a surprise and something lesser amount of oil coming on the market than in the official plan.
I mean, just on the final point, Robin, the Fed obviously holds so much of this in their hands. Any indication from them that they're even remotely paying attention to inflation or otherwise could really bring this house of cards down? Your thoughts on how they're managing it and going forward? Will they be able to continue to ignore the rising threat of inflation?
Look, I think for the rest of this year, I don't see that. I think the priority is on economic recovery and the stimulus plan in next year. If inflation is starting to take off, yeah, absolutely. But I think for this year, the direction is pretty clear that there's a intention to revive the US economy, and the direction of Biden's policy is pretty clear.
Yeah, bake it more. If anything, it's more of the same. Ultimately, but where will the bond yields go? I think if they come back to challenge. Listen, we'll leave it there for today. Leo, thank you so much for joining us from Singapore. Peter from Sydney and Robin from here in the UAE. Thank you all for your time and insights today, and we'll catch up with everybody over the coming days. Have a great week. All the best. Thank you.